And so starting with myself, before we get into what's the dream of crypto payments, what was the current reality and even the path ahead, I'm the executive lead at xMoney, as obviously has been explained. And xMoney is a platform that allows businesses to start accepting crypto payments and still deal with it as if it was euros or a stable coin. So for their experience, it should be as seamless as starting to accept Stripe or PayPal. And that's the whole gist of it, the whole explanation to some degree. So on what we have to do is simplify everything of the experience of crypto payments to make it as easy as possible. That meant that we currently have use cases in the auto industry, in real estate, so some people have already acquired houses through our payment system, retail, luxury, travel. We have a lot of businesses using our platform across the world. And even when we consider not just businesses, not just standard e-commerce, we're talking about some more institutional players as well. In this case, the Cita de Lugano, so an area in Switzerland, and also Liechtenstein, the administration. So these were more heavy processes of due diligence on their side, but they wanted to allow their citizens to even be able to pay services on the government with crypto. And we've helped being able to do that and simplify the experience on their end. So let's start with the dream. And this is sort of the spoiler that you just got with the pizza, because that's what I'm going to be talking about next. But when we consider the dream, we need to consider the first use case. And the first use case is Bitcoin. And this is a screenshot of the Bitcoin white paper. And the Bitcoin white paper is basically the first document explaining how to make a blockchain possible, how to solve the use case of having a distributed system that actually has no centralized party in terms of the communication. And so when we get into that, literally on the first sentence, would allow online payments. Online payments is the first use case, the first example, the first thing that you wanted to solve with Bitcoin, and potentially, to some degree, the only thing that can be solved in Bitcoin. Not the case with other chains, but when we consider Bitcoin. And the goal was to not have to pass through a financial institution. So when we get through this part, and we try to understand a bit more about this dream, we see that the promises of crypto as a source of payments is you're not going to pay much transaction fees. There's very low transaction fees. You have full control over the crypto payments. You have full control over your crypto because it's fully decentralized. There's no one that can simply go to your wallet and eliminate the zero. The transactions should be instant. You shouldn't need to wait for the bank to be open to do a transfer from one party to another. They should be instant. They should be as quickly as possible. And that the market is global, because this is not centralized in a country, in a region. This is a global market, just like the internet was. So let's look at what has been crypto payments. And so here's the spoiler, obviously. So this already happened, the Bitcoin transaction, the first one. It was 10,000 Bitcoins. Roughly now, that would almost be $800 million for the $41. So you see that there's a bit of difference in value. So the first lesson is that, though there's volatility, the value that you currently have in most cryptocurrencies obviously can change. And even on the stable currencies, some of you remember Terra and USD, it was very stable, but not. So let's go into other examples. Bitcoin. So this is a chart from 2017, and there was a spike of $55 for one transaction. So you wanted to pay $41 for the pizza, and you paid plus 55 to do the transaction. And this is the average of the day. So actually, some of them were more expensive than that. And you can say, oh, that's just one day. You can see that the chart it doesn't start at 0, it starts at 4. So the minimum payment is actually, minimum transfer is actually $4. So yes, it's Bitcoin. Bitcoin is legacy. No one has improved Bitcoin almost. So let's talk about Ethereum. 2022, $200 to do one transaction, average. We're not even talking about tokens or smart contracts. And again, it doesn't start at 0. There's multiple times where it starts at $30. Obviously, other periods where it was lower. And clearly, and agree, there's other chains that are more efficient, but I just talked about more than 70% of the market value in Bitcoin plus Ethereum. to some degree. So we're not talking about small players. We're talking about where most of the value currently still is. And so the second lesson is we cannot really say that crypto, by default, has low transaction fees. For many things, it has substantially high transaction fees. And I'll get to the comparison in a bit. So let's look at something else. 2023, this was according to AI, but I checked some sources, it's consistent. Americans lost a lot of money to fraud scams. This was just based for Americans, so we can extrapolate that for the rest of the world. That has increased. More than 60,000 complaints. And really, the insert value is on purpose because no one knows exactly how much has been lost to private keys that have been forgotten. But you can insert the value and it's going to be high because a lot of people forgot their access to their crypto wallets. So the third lesson is full control. Yes, you have full control as long as you know how to use it and as long as you invest in the right things and etc. But again, this is not part of the promises that exist by default. It has some work for it to be possible. So let's talk about transaction time. We don't need to understand much of this chart, but there's an average period which has more than 8,000 minutes. It's not 8 minutes, it's 8,000 minutes. This was for Bitcoin in this case. And Bitcoin blocks take 10 minutes minimum. Some blocks take 1 hour to be mined. So 1 hour for you to wait for a transaction for a payment of a coffee. So you go to a coffee shop, I want to pay with Bitcoin. And if it's in a fully decentralized fashion, if you initiate a transaction, you're going to be doing that, and you're going to be waiting 1 hour, potentially. So instant transactions. So let's talk about the current reality. This has been what has happened until now. So currently, what happens? Buyer goes into any website. He selects that he wants to pay with crypto and not with a credit card. He connects his wallet or copies the address. He approves the transaction, and he waits. That's fine. That works well. Let's remember, the buyer pays for the transaction. Do you pay to do a credit card payment? When you do a payment for 100 euros, you go there, do you pay 100 euros plus 3, plus 4, plus 10, plus 200, like the example I showed about Ethereum? You don't. The buyer doesn't pay normally. So in the comparison to the crypto payments, where you need to initiate a transfer, you're actually paying for the transaction. In some chains, yes, it's 1 cent, but it's 1 cent. And I don't want to pay every time I use my credit card. So crypto payments, there's a difference here, where it requires a transfer to be initiated by the buyer, and the buyer pays the cost of that transaction, if it's on a fully decentralized fashion. He waits for the transaction. He doesn't know where it is. He can try to track it, but is it going to be confirmed? Is the second party going to receive it? What's happening? In the case of Bitcoin I talked about, it can take 1 hour for you to confirm that the transaction has been successful. And we've talked with many people, we've done research on our product, and this is one of the most painful moments, is, did I send it to the right address? Is it the right sender? So that's one of the biggest issues. Another one is that refunds, by default, do not exist. It's just another transaction. You don't have a way to revert it. From the buyer experience point of view, this is an issue. Talking about another example, Tesla. Tesla started accepting Bitcoin payments. And if the Bitcoin transaction or the order didn't go well, if it was canceled, if the pre-order, something happened, they received the same amount in Bitcoin, which could have lost value in 20% or 10%. So refunds, even on that consideration, were an issue. But let's look at the business experience. They integrate a payment method, like they would integrate Stripe or PayPal, but integrate a crypto payment. It generates payments automatically. They wait for a new order, and they receive the settlement. Okay. Advantages. They pay less cross-border fees. So instead of paying up to 4%, sometimes they will pay a flat fee of, or a percentage fee of 1% or 0.5%. They get no chargebacks. For those who don't know, sometimes if there's fraud in a card, it's the business who loses. So if you pay something and there was fraud, you're going to get your money back from the bank, but the business loses it because there was fraud. So it's a chargeback. But they don't get that on crypto. That's one of the biggest premises of crypto, is that it's immutable. When it's on the chain, it doesn't change again, so there's no fraud that can happen in that way. So the business wins. And the business gets to a new audience, and that audience has higher retention rate, which is basically, if that business is accepting crypto payments, if I have crypto and I want to spend it, I will go again to that business. And this is something that we got from our businesses as well, is that crypto users tend to actually pay more on average than fiat users. Another situation, fragmentation. There's more than 15,000 currencies. There's more than 1,000 exchanges. There's more than 200 layer ones. So I've talked about some examples of some chains, but there's 200 plus just layer one chains. So there's even more chains. So this complicates when we're trying to solve one part, there's no one that is solving for all of them at the same time. Statistics. Bitcoin, USDT, Ethereum, USDC, some of the biggest used currencies, USDT and USDC also available on Ethereum. So these examples I was talking about is actually the biggest chunk of the market. And it's one of the biggest issues that we have. The average transaction amount's quite high, like 2,500 for USDC one. These are statistics from BitPay, so actually based on the US market. So normally they would be higher than when we consider Europe, for example. But one thing is clear, is that crypto is king when we're talking about large transactions on a global market, and that's where instant transactions and low fees are actually true. Because if the comparison is, I'm in a supply chain business or another case, and I want to do a transaction or a payment for a service of 50,000, and I need to send it from Portugal to Brazil, or I need to send it to Angola, that's when, in the traditional market, you might take 1 week to do the payment because of bank holidays, when banks are open, validation, it goes through multiple parties. And if you're doing for 50,000 and you pay $10, when the alternative would be paying for $200 or $300, for sure. The crypto premise of being by default a global market means that crypto payments is currently solving issues when we consider cross-border transactions, especially for large transactions, not for smaller ones. And that's where these promises that I talked in the beginning are true, and where the buyer paying for it is not an issue, because we are usually talking about B2B transactions or remittances. So, getting into the path that we have ahead, regulation. And we talked a lot about regulation yesterday, and regulation is something that is scary. And we don't want regulation on crypto if you want everything to be open and free, but in fact, regulation is an opportunity. Regulation is not just any challenge by default is an opportunity. It's from regulation as well that we can try to remove a lot of the fraud players on the market. It's with regulation that we can try to create protocols for the communication between different parties, even when it comes to sharing and validating user identity, for example. So it's a lot of this regulation that is currently happening, namely DORA and MiCA, that are the ones that are currently more talked about in terms of Europe, that might make this an opportunity for us to become more successful. Obviously, user experience, and again, I talked about this on the panel yesterday. User experience is key, and it's part of the issues that we can have. The buyers are the ones paying for the transaction. They get stressed. They don't know where they need to send it. Most businesses still don't want to accept crypto payments because they also don't want to deal with the complexity. And from another angle, the fact that we need to start operating more in interoperability between each different player that exists on the market. And when we consider these factors that still are part of the challenges that we have ahead, it goes back into the regulation. I do think that it's an opportunity that we have now to start connecting the dots and being able to allow crypto payments to become a better experience between these different parties by having to comply with certain protocols that until now have not at all existed. And this might make it so that a transaction with pizza, for now, might not be something that you actually have advantage other than the novelty of paying with Bitcoin, because for the most part, we also need to recognize that many of the crypto assets are not means or values that you want to do payments with. They are investments. Most people that have Bitcoin, you don't want to spend it on a daily basis. you want to invest on it on the long term, or the short term, or medium term. And at some point, what you will do is, okay, I was able to get a lot of investment, and I gained a lot through this process. And now I want to get some luxury. I want to buy travel. I want to buy a car. I want to buy a part of real estate because I want to diversify my investments. And so I want to get into real estate. And this is where currently we see as xMoney that most of the transactions in crypto actually happen. It's diversification, luxury, travel. Those are where most of the crypto payments want to happen. Because otherwise, for the most part, at least within Europe, because that's the market that we're in, fiat is still a better option for the buyers. You're going to pay less fees by default. It's going to feel more immediate. But the issue is for businesses. And businesses are the ones that, for the most part, are more scared about crypto payments. Businesses are the ones that are sort of running and like, this is fraud, this is an issue. And again, part of regulation, part of the user experience. And the fact that we try to be an intermediary is where it's going to be helpful. Just to conclude, when we look back at the white paper of Bitcoin, if you look at it in detail, it explains that intermediaries on crypto payments should exist to some extent to be able to validate that there's no issues that happen on a payment experience. From a transfer point of view, they don't exist. So it means that we can remove a lot of the costs that exist with Visa, with MasterCard, and etc. But from the sake of a normal payment operation, payment gateways are going to be default and are here to stay, especially with the regulation. So with this, thank you.